Welcome, everyone. This is David Morgan from themorganreport.com, and this is the first Wall Street Silver interview. And today I have appropriately the Happy Hawaiian. And it's my understanding that the Happy Hawaiian was really instrumental in pretty much kicking off the whole Wall Street bets that became Wall Street Silver, and put out an essay on the silver market that really provoked a lot of serious thinking and ended up again turning into a Reddit group that's reached about 100,000 currently. So Happy, welcome to the interview.
Yeah, thanks for having me, David. I'm looking forward to talking.
Very good. Well, the first question for me is, why silver and why now? I mean, I know you're much younger than me, and we have spoken off record a couple of times, and you obviously are very bright and had a lot of curiosity, but you also dug really deep and reached really far and had, in my study, very few inaccuracies. So what drew you to the silver market?
Yeah, so I was involved in some of the short squeeze movement of GameStop. I also had a few AMC shares, a token amount, back in January, and was having a lot of fun with that. I also posted on Wall Street Bets about some other stocks that were less notable. So I was active in the Wall Street Bets Reddit community. I wasn't Reddit famous by any means, other than a couple of posts that weren't even related to investing, getting up kind of to the front page a few times. But yeah, so on that Wednesday that GameStop had buy orders shut down from most of the retail brokers, it collapsed the first time. Happened to be that same day I saw another post on silver that was maybe a paragraph or two basically saying we should short squeeze silver. I had heard about some of the rumblings of the paper precious metals markets to physical. In the past, I was very attracted to the whole populist short squeeze movements that were going on and thought that silver would be a great next target. And actually in that post, I even told people, hey, we're doing GameStop right now, but when this is over, let's go buy silver. I didn't even say go buy it immediately. But it blew up very quickly, and Zero Hedge picked up the article, and then on that Friday, and then over the weekend is when everything started going crazy in terms of media attention, and retail dealers kind of started to sell out of silver over the weekend, which drove the media even more. There's then a lot of Reddit politics on Wall Street Bets of silver trying to crush GameStop, and just some back and forth with that was ugly and unnecessary. But even before that, I was tangentially interested in silver. I had played around with SLV options a few times the previous summer, just on the inflation theme generally. I am an inflationist. I would describe myself as expecting higher inflation for this decade, just with government spending expansion, social benefit expansion, which, people can believe whatever they want on a number of issues. My political views are very diverse. I'm the type of person that would make both sides angry, probably, but whatever way you believe, you can still invest for higher inflation. And I think silver is probably one of the more levered and best places to be for an inflationary decade.
Very good. I'll add on to that. I want to be, the host and interview you, but anyone that knows me knows I can talk. I'll just back up what you said. Two most famous books about deflation and inflation, in my view, is written by Professor Roy S. Jastrow. He wrote a book called The Golden Constant. And what he did was measure gold against a basket of commodities. And he pretty much proved that gold does the best during deflationary times. Of course, most of the studies were done during a time frame when gold was the money of the realm. So you got to bear that in mind. After he wrote that, he had some curiosity about, well, what does silver do? And he wrote a second book called Silver, the Restless Metal. And the bottom line of that book is, first of all, silver is mixed on a inflation deflationary basis. In other words, gold does great in a deflation almost everywhere that study took Professor Jasper, whereas silver had mixed. Sometimes during the deflation actually looked pretty good, other times it did not. But the conclusion that he wrote, and he wrote it in the foreword to the best of my memory, is that there's nothing better. Now remember, this book is several, a few decades old, but there's nothing better than silver in an inflation environment. So just want to back you up on that, Happy. So what independently, and I know since we again, exchanged a few emails and had a couple of chats, what have you concluded about the manipulation? I mean, I wrote a whole chapter or two on it, but I won't make this about me. You're fresh, you're new, you have new eyes. You say that you're politically, all you use the word agnostic. It could upset both sides. So, and I really agree with a little bit that I think I know you, that you are your own man. You don't get swayed by pressure one way or the other. You take a fresh look. So you've had a fresh look, and you're a good thinker. So what do you think about this paper paradigm versus physical reality?
Yeah, I mean, I think there's kind of the surface level piece of it, which is you can look at just data from the CME, from the futures exchange. You can see that there are fairly large concentrated short positions, and then if you just look at banks generally, the ratio of the total open interest that they have in terms of combined short interest relative to their long side, so their net short interest is quite large. I think it's roughly 300 million ounces, 350 million ounces net short, and then you can compare that to the registered inventories of now down to about 110 million. And it's an old phrase, I guess you could describe it as, that if a higher percentage of longs take delivery than expected, that can cause a short squeeze because there isn't enough readily available metal to cover those paper positions. And even beyond banks, just looking at open interest generally, it's more like 7 or 8 times. So there's some strangeness in terms of the optionality of taking delivery. But as you get closer and closer to inventories running out, it's kind of a weird incentive of longs that would be driven to want to take delivery so that they don't get cash settled at some point if things got really dire. So it's kind of this engine that can really spiral out of control quickly. And because it can spiral out of control quickly, I think there is plenty of motivation to keep the price down. Excuse me. We live in an era where, converse to traditional thinking, higher prices drive higher demand. So if you look at any of the meme stocks, Tesla, tech stocks, over the past few years, as they go up, people buy them more, and they go up even more. So there's plenty of motivation to suppress price, just because if price starts running, if it gets technical breakouts and algos start buying, this situation can snowball very quickly. So there's plenty of motivation. On the surface level statistics, in terms of the futures market, there's definitely a large short position relative to the 1,000-ounce bar inventory available. But then, behind that, there is, a separate kind of fractional reserve banking system around precious metals that adds more leverage, and that part is much more opaque and hard to grasp. Not really accessible from a retail trader's viewpoint. And I think that is a part that, it just adds more fuel to the fire if this thing starts to unwind. So again, just another layer of paper short positions that would add motivation to do this. In terms of, actual evidence of manipulation, there have been large fines against JP Morgan. Their metals desk was declared a criminal enterprise by the Department of Justice for their actions. That spread across multiple banks with dozens of traders involved over, I think this investigation ran nearly a decade's worth of time. So there's plenty of evidence that there are spoofing and collaboration between banks, traders at different banks to manipulate precious metals markets. So I think there's definitely evidence. In terms of long-term suppression, I think, I think that is just more of a feature of the ratio of paper to physical markets. It's just like normal banking, where in a credit expansion time frame, you're going to get an increase in the money supply, and each dollar is going to be worth less. And then in a deflationary time when credit contracts and the reserve ratios potentially rise at banks as they become more conservative, or they're forced to become more conservative, and the monetary supply comes in, you can get deflation, and that those dollars can be worth more than they were before. So my thought on it is gold and silver are alternative currencies. Unlike other commodities, they have this fractional reserve system built upon them. As the paper markets expand, essentially the fractional reserve nature of, say, silver, as that reserve ratio gets lower, you get credit expansion essentially in silver. That causes inflation in silver. So silver is worth less relative to the rest of the goods and services in society. And if you can force essentially a bank run, or not force, but see it coming perhaps, and further it along with your own purchases, in a bank run scenario, credit contracts because the reserves of the bank are withdrawn, and a credit contraction would cause deflation among precious metals, and thus they would rise in value relative to dollars or other goods and services that they compete against. So I think, the banking community does not want that to happen. I think they like to have to be able to do whatever they want with gold and silver loans. They don't want that whole system to contract, and there's plenty of motivation for it. I don't know how you can prove long-term suppression necessarily. You can definitely prove manipulation from various banks. That was a very long-winded answer that I think went all over the place, but I don't know if you want to add anything to that, David.
Well, perhaps. I think really it's kind of pleasurable for me to sit on this side of the microphone and ask the question. So I'm going to ask the question. First of all, if you read into what you said, you probably already answered this, but let me be direct. This is the third most often question that I get. Well, now that you know that the market's managed or manipulated, why would you bother to invest? So, Happy, why would you bother to invest knowing what you know?
So, one of the first things I was asking you about, maybe 10 days or so after that original post and all the craziness, and I was seeking out more info because info is not readily available on these markets to retail traders the same way they are with equities, is just how much silver there is available. And this market is so small. It is absolutely minuscule in overall size, and especially when you're looking at the 1,000-ounce bars, there's maybe 1.5 million to 2 million, or slightly over 2 million 1,000-ounce bars. So you're talking 30 to $60 billion in terms of 1,000-ounce bars available, and then a much smaller portion than that actually being available to be allocated further for new investment. So, 110 million ounces of registered inventories is $3 billion. And to a normal person, $1 billion seems like a lot until you look at, all the equities that are worth hundreds of billions, or, like Tesla or Amazon or Microsoft, that Wall Street Bets over the past few years has been able to just continuously gamma squeeze higher. Those have been down lately, but for 2019 through 2020, most of the posts on Wall Street Bets were just about people buying specific calls on these stocks and specifically attempting to go for gamma squeeze on them. So if, this tiny group of Wall Street Bets traders, which it was a 20th of its size back in 2019, can move stocks like Microsoft, why couldn't they buy a marginal portion of the silver market, which, if you listen to commentators, might as well be the Pacific Ocean, when in reality it's your neighborhood pond in terms of size. Why couldn't Wall Street Bets squeeze silver? So it's an extremely tiny movement. I know people like to think 100,000 people in Wall Street silver is a lot. That is really not that much at all in terms of the total population. And then you have to look at just marginal buying as well. So, a lot of those people were, long time silver stackers. I'm sure they're buying more now, but, double Wall Street silver in size or triple it. And if people focus on 1,000-ounce bars, there's not much room left to run if you're one of these large short banks, in my opinion. So I just think it's very doable. And I'm not necessarily pushed away by the medium or short-term manipulation. It is frustrating to see, because I know that everything's a momentum trade now, and as soon as it breaks out and starts, if silver goes up 10% one day, up 10% another day, some huge moves, everyone floods in at that point, and then it moves even more, a lot faster. People aren't as interested in a market that goes up or down 1% a day. They just want to see something like lumber or rhodium or palladium that's just going limit up and on this continuous squeeze pattern, and people like to jump on once it started squeezing. So it's kind of a chicken and the egg. You need people to come in for it to start squeezing, but then once it does squeezing, a whole lot of more people will come in, and I just think the rope left for these large banks to hang on to is running out, and it wouldn't take all that much. Jeff Bezos or Elon Musk could put a low single-digit percentage of their personal wealth into silver, and it would be over. Or gold longs could sell 2% of their gold and convert it to silver, and it would be over. There's so many things that could happen to basically make this thing happen right now. It's just hardly anyone cares. We're in an echo chamber where it seems like everyone cares. But if you look broadly in society, almost no one cares about silver still. So I think it's possible, and that's why I'm interested.
Very good. Well, we're going to go ahead and stop there. I'm looking forward to speaking with you again. Do you have anything that you'd like to say to the silver community as far as where to find you, like on Wall Street Silver? Or
I'm an active online commenter. I tend to post on Reddit when I have a longer, more collected thought I want to, tell the world. But then my shorter blurbs that I tweet out all the time. Again, I said tweet, I'm on Twitter as well. So I'm the Happy Hawaiian on Twitter. If you're looking at my handle specifically, there's no E in the. And on Reddit, I'm just the Happy Hawaiian. Those are kind of the only two places I'm active on the internet currently. But yeah, that's where people can find me. And then I'll also say, and you can put this in one of the segments somewhere, maybe the first one, that I'm very grateful that you picked up the phone the first time I called you. Shortly after my first post, I had, not spoken to really anybody who's, say, like a bigger name or a longstanding expert in the field. And you really helped me to get my feet under myself in terms of understanding this market specifically much quicker than I may have done otherwise. So, you're thanking me for helping bring energy to this movement from, say, the younger crowd. But I would also thank you for, allowing me to do that and allowing me to do it much quicker than I might have otherwise. So, very much thank you for that.
Well, you're most welcome, Happy, and been a pleasure. We'll we'll end it there. And I'm looking forward to interviewing you more and also others from the Wall Street Silver community, because there's a lot of very creative people and some really good thought patterns and a lot going on there. So plus we need some fresh blood. I think people are probably tired of looking at me and hearing me, although I'm very happy to do it with you anytime I'm asked. But no, it was really a pleasure. We'll have you back again, and just make a great day, and we'll talk to you soon.
All right. Thanks, David.